All right, so what's up, everybody, and welcome to another episode of the Abundance Podcast. So here with us today, we have my dear friend Sean Gunning. So what's up, Sean? How are you, man?
I'm great, Alexis. How are you today, man? All right.
Awesome.
It's good
So
to be here.
why don't we start? Why don't you tell us a little bit about yourself and your journey and what you're doing right now?
Yeah, absolutely. So to share this start, it's a little embarrassing. So I'm not sure how many people I shared this with, but want to be vulnerable when transparent with your audience here. So I actually started in crypto probably about a decade ago. I bought some Bitcoin, probably like $1,000 in Bitcoin, and it didn't really do anything at that time. I stored it in a cold storage wallet, didn't really think about it until the bull market of 2017. And then I bought some more. Crypto was going up. I said, "Hey, let me buy some more." And that's at the time when I also got Instagram. I was new to Instagram. I was a late bloomer to social media sites. And I'm sure a lot of you guys know Grant Cardone. This has nothing to do with Grant Cardone by any means. However, his pilot, I was following his pilot. His pilot, someone had a dummy account of his pilot that reached out to me to say, "Hey, why don't you send me over some Bitcoin and invest?" And I ended up sending them probably $2,000 worth of Bitcoin. Obviously, looking back on it now, it was a scam. I completely got scammed, and I admit it. It's very embarrassing, but that was my first foray into Bitcoin and to the digital asset markets, getting scammed. And it was devastating and it was disgusting. And I was kind of turned off from it for a very long time. I've been in the traditional markets. I've done close to 100 million in 401k business personally, and I was really more of a traditional finance guy. And what got me back into the world of Bitcoin was a token called XRP, which I'm sure a lot of your viewers are aware of it, and started to understand that there were some big problems in finance. One of the biggest problems is cross-border payments, remittances, quick, fast transactions. I mean, even to this day, if you send a wire to me, that wire can take 2, 3, sometimes a couple weeks, especially if it's international, for it to settle. So I started to realize that there's this really cool technology called XRP that can actually speed up the traditional financial markets that I was participating in and that I was working in. And that was a very revolutionary technology for me. And that actually got me back into crypto. And really, for the past, that was 2019, 2020, for the past, I would say, geez, 3, 4 years, I've just been researching this space almost every single day. We just launched a fund as well to take advantage of these markets and of this opportunity. And that really got me back into the game. And what I realized once I got back into it is that Bitcoin is the market leader. It's the mover of the market. What Bitcoin does, especially right now, a lot of the other tokens generally follow. Right. So what we're focusing on is mining Bitcoin, because we want to be on the 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 side where we can take depreciation, and there's less volatility in the market when you mine than if you're simply just buying the token and waiting for it to appreciate or trade it. So that's really our strategy. That's what we like about this space. Our team and our fun. But embarrassing story. That's kind of how I got into it. It wasn't looking good, but what do you say? There's find purpose in pain, right?
Yeah.
So it all ended up working out at the end of the day.
Yeah, I mean, one of my closest friend, he also has a hedge fund, and his beginning in trading was crypto, and he made like I think around 17,000, and then the next day he just got scammed. Like his wallet disappeared. He wasn't able to connect to his account anymore, and then boom, 70,000 just gone out of thin air. So you're not the only one who got scammed with crypto, that's for sure.
Yeah, that
So
that that
yeah, go ahead.
happens for yeah, that happens for sure. And definitely got to be careful, on where you're connecting your wallet, what trust lines that you're connecting to, if you're using an offline wallet. And another story along those lines, and I know online, and what I just want to share with your audience is, like, the truth of this space is that what you see online, like what you see your friends posting on Instagram of making millions or hundreds of thousands of dollars, really is a small fraction of what actually kind of happens in this
Mhm.
space, right? Like I think we would all agree that there generally is not a such thing as get rich quick. You know, there's work, there's effort, there's energy, there's timing, there's luck, there's persistence, and you know, similar thing happened to me, right? You know, during the bull market, I participated in a bunch of ICOs, made tens of thousands of dollars. You know, one specific one, I made like 40 some grand. I rolled that 40 some grand into another token or project, and it basically went to zero. So it's like
Mhm.
my entire gains from that one big win basically went to zero,
Yeah.
right? So you know,
And
that
what
could be
people
some.
show on social media is that they showed a big gainer, and then they don't show that they lost it right away. That's just a classic.
Exactly. So, you know, basically, you know, I went from geez, it was Tomi token was a token, and then I rolled it into Klima. And if you just look at the chart of Klima down right now, it basically just trends to pretty much zero. So, um, you know,
So
that's the reality.
so tell me what you think about that. So my perspective on crypto, and I'm not a crypto expert, and I don't spend at all any time researching crypto, but this is my perspective. As far as trader, like short term trading, I have nothing against it because if you're making money, you're making money. I mean, at the end of the day, I cannot say anything about that.
Right.
Then, as far as the infrastructure behind it, so the exchanges, investing in the different type of infrastructure that supports the market. I mean, I don't know enough about that, but it seems like a great way to invest. And as far as mining as well, I have nothing against it. uh, I don't really understand it, to be honest, but it's something I would like to be part of eventually. But as far as investing in crypto as an asset, that's where I disagree with most of the crypto bros, because I mean, there's people are either saying that, oh, it's a currency, or they're saying it's an asset. So as far as Bitcoin is never going to be a currency, because no currency is that volatile. Like, it's not a currency at all. Maybe it's going to be like USDT, USDC, something like that. But even if these crypto becomes a currency, doesn't mean that the price of Bitcoin is going to go up, right? Doesn't necessarily mean that. And then, as far as Bitcoin, people are saying that it's not a currency, so it's an asset. But it's really not an asset when you think about it. People are comparing it to gold, right? Because gold has been the safe haven for for money since more than 4,000 years, right? When world goes to shit, everybody puts his money on gold in gold, because it's a safe haven, right? Radio, the cycles, when a new world order starts, it's always their country is always linked to gold. Eventually, they have too much debt, so they have to, yeah, exactly the book I was talking about. Yeah, so eventually they dissociate from gold, but gold is always a safe haven. As far as
Right.
crypto, there's no track record to say that it's going to be a safe haven when things goes to hell. And then also, there's nothing behind it. If you really think that if the US, let's say, they default, people are gonna run to put their money in crypto, in Bitcoin, I'm not sure. So tell me what you think about that, because for me, it's neither a currency nor an asset. So
Yeah, well, a lot to unpack there, Alexis, and I appreciate your perspective on the markets, right? So when thinking about Bitcoin, I always like to bring it back to its most fundamental sense. And that is really the ethos of why this project was created, and how it has evolved over time to where it is at this specific moment. I'm not a wizard. I don't have a crystal ball, and a lot of these people that say they know where the market's going to go are probably lying to you. So I'll be the first to tell you that, you know, by no means is any of this financial advice or anything. I have no idea where this is going to go, but I can tell you the current state of where things are right now. Now, before we get into that, though, I'd also like to share and kind of peel back the layers first, and just quickly talk about the Federal Reserve and the Fed. Because when we had the conversation of Bitcoin is, you know, it's not worth anything, it doesn't have any value, I agree to 99% of that argument, in the sense of, well, what does actually have value? Does the US dollar actually have value? So when people say, "Hey, Bitcoin doesn't have any value," gold has been a classic store of value for thousands of years. We all know that. But when someone says, Bitcoin doesn't have value, I always equate it to, well, does the US dollar have value? And you don't
Well,
have to answer me right now. This can be rhetorical for your audience, but if you want to answer that, you absolutely can.
I mean, it does have value. I mean, I'm the first to say that the the US dollar is a pyramid scheme and it's gonna collapse eventually. That's a certainty. And the debt ceiling is just going higher and higher, and money is nothing. I keep saying money is nothing, but after that argument is done, the US dollar does have value because it's backed by the US military, the strongest economy that ever existed, and it's the world reserve currency. With the book you have in your hand, it explains that. So basically, every international exchanges that of goods, and especially of oil, has to be done in US dollars. So it has the demand, and it has the value of being a trusted currency. And so it does have value, even though it's all a scheme and it's nothing. At the end of the day, it's backed by strongest economy, international relations, trust, and the strongest military to ever have existed.
Yeah, and I agree with that. And there's a really good book coming out by John Pennington Jr., the father of Bridger
Yep.
Pennington from Fund Launch. It's called Money, the Fed, and Bitcoin. Definitely a good book to check out for those. So I definitely agree with you on that, right? Like the U.S. dollar has value because of those items you just laid out. But what's really interesting about this current economic time that we're in, people want to trade their U.S. dollars for the ability and convert that real money into Bitcoin. And the more that people want to convert actual US dollars into Bitcoin, Bitcoin USD is the largest trading pair right now. That will continue to add pressure to the overall price when related to US dollars. So although underlying it really is just is a technology, it's a method it's a record of account. That's a ledger. It really all blockchain technology is. Bitcoin was the first one. But what's really unique at this moment is that more and more people are willing to convert their US dollars into Bitcoin to use it as a digital store of value like gold, although it's not gold, and also to use it as an asset to potentially trade. And we're seeing that now. I know it's not like a great example, but Venezuela, has used Bitcoin as its currency, or has adopted it as part of its currency. And a story that has struck with me always is like, Alexi, you're in Canada right now, right?
Yep.
Yeah. So if you want to fly from Canada to the United States with $1 million in cash in your suitcase, what's going to happen when you go through security at TSA?
I'm gonna get caught.
Yeah, right. Or let's just say you're flying and you have 30 pounds of gold bricks in your backpack, right? Like, what's going to happen when you go through TSA?
Same thing.
Right. So what's really unique about Bitcoin is you can convert dollars, you can convert any asset into something that's digital. You can put it on a USB, you can stick it in your backpack, and you can basically travel the entire world and have access to immediate value. And when we think about today's interconnected economies, right? Our level of social communication. You and I are talking from US, Canada. We could immediately pick up WhatsApp and talk to somebody in China or India. With how connected everything is, my theory and my thought has always been, over time, we're going to need to move to a digital type of system or a digital type of currency in order to speed up transactions and to send value, particularly money, at the speed of light for a fraction of the costs that they are now. There's a lot of projects that are doing this. XRP and XLM are one of them. Bitcoin, can help with that. I think there's probably better technology on the Ethereum network that can do so. But at the end of the
Mhm.
day, I think, to answer your question of where does the value come from, I think the interconnectedness that we all have is leading towards this evolution of our financial system and how we interpret what money and what gold actually looks like. And I think it's a cool thought experiment. And right now, there's a lot of really cool things happening. Right, you have two things, and then I'll turn it over to you. But two things is, there we have big financial institutions. I'm sure you and your viewers are aware with the BlackRock ETF, right? So we have BlackRock, the largest asset manager in the world. They have trillions of dollars under management. They want to create a Bitcoin ETF, right? Now, when they do that, they actually have to buy Bitcoin and hold it in custody in order to launch an ETF. So what's going to happen when all of this supply of Bitcoin now comes off the table? It's going to generally raise the price, simple supply and demand economics. It generally should raise the price of the overall asset if the asset is being denominated in US dollars, because BlackRock is converting their assets, which are generally US dollars, into this digital token, to put all this money on its books to then launch a new financial product, a Bitcoin ETF. That's number one. Number two is, it's kind of neat what's happening in our current financial markets right now, right? We've had the Fed pause rates as of now. They said maybe in December they'll relook at it, but world reserve currency. So for those that want to learn about how markets work, I think the single best thing that anyone can do is simply Google the Fed, learn all they can about it. There's a really good book. I might have it back here. The Creature from Jekyll Island. It's an amazing book about the Federal Reserve. I would research what happens to markets after an FOMC meeting. And what's really amazing now is the Fed paused the rate hikes. And this is all part of the plan, right? The Fed wants to weaken the economy. So how do you do that? You raise rates. So it's a simple finance equation. As rates go up, what happens to prices? They go
They
down,
go up.
right?
The economic growth go down,
Right.
and so there's less. Yeah,
Exactly. So really simple finance equation, this is like finance 101 in college. As you raise rates, prices go down. So as you raise rates, the stock market should decrease. Well, what are we seeing with Bitcoin? The Fed has paused rates and Bitcoin has actually been rising. And a lot of people are saying it's because of the BlackRock ETF. But from what I'm seeing, it's more so of the Fed's economic policy that is indicating that the US economy is weakening because the rise in rates is working, the economy is weakening, so that should bring asset prices down, right? However, we're seeing a inverse correlation right now to the stock market. So as traditional markets are going down, we're kind of seeing Bitcoin now start to gain a little bit of steam and rise a little bit, which is pretty cool to see. So I think a lot of people are viewing at this time Bitcoin as a more of a safe haven to traditional assets when we are living in a world of increased volatility. But for you and your viewers, like I think we all would agree that this volatility is being created by the Federal Reserve, right? Like their policies are causing these markets to react this way. And as of this moment, maybe in the future it won't be the case, but as of this moment, Bitcoin and cryptocurrency can be a hedge to what is currently happening in today's market. So that's a very long diatribe. Sorry, but I'll turn it back over to you. So
yeah, no, well, so in terms of the technology behind it, and you're saying that this is where the real value comes from, that I can agree with, right? Because it's all about the international transfer and the wire transfer. They all take like a few days to process, if it's not even more.
right,
Um, so I would agree that there's some value there. Um, Now the next thing though is there's another type of digital currency that we did not mention yet. It's the central bank digital currencies, right? Or just the digital currencies in general, which are not crypto. So instead of being decentralized like crypto, they're centralized.
right,
And so they would technically offer the same kind of technology and of efficiency and of speed, right? So then the real question is that what would be what is in the best interest of the governments and of the big companies that are arguably also one step even above the governments.
Right.
So then, what is in their best interest? Is it to have a decentralized cryptocurrency, so a decentralized digital currency that they have no power over? Well, arguably they have power over right now, but that they basically it's theoretically out of their control, it's decentralized, or to have a centralized digital currency that they can control very well. And so instead of right now, let's say we're in a fiat currency, so they have some control definitely, but cryptocurrency would give them less control over the population, but a centralized digital currency would give them more control over the population.
Correct.
So
Yep.
now, if we argue that what they want is more control and not less control, I would say that yes, I see the value into having this technology, but if that's where it's going, I would see it going to centralized digital currencies.
Yeah, great point. And I agree with that. We are seeing a push for central bank digital currencies. I believe right now there are 200 countries that have either are in a pilot or have started their central bank digital currency investigation. So more to come with that. But and right now, the Federal Reserve is already working on it. FedNow, if you're familiar with that, FedNow is a blockchain-based system to basically get people used to this idea of instant settlement and instant transfer. And the push soon is to move to a central bank digital currency in the future, because in a centralized system, centralized blockchain, the government does get a lot of control, right? They could turn off your money in an instant.
Mm.
They can now track anything that's over $600 in transfers. They can have a social credit score, and if you don't follow the rules, if you don't do certain things, we'll keep it to that. They could basically turn off your money or make it very hard for you to earn, right? And then that can be tied into your personal wallet that includes your driver's license, your voting records. So there is a just like any technology, right? There can be an abuse of power, and there can be control mechanisms that can make people's lives harder. Um, what I would like to highlight here, though, is just because there is a fiat system that is operating under a central bank digital currency, because all they would simply do is just take the money that they currently have and just move it digitally, which it's already digital now. When's the last time that you've used cash, or any of your
It
viewers
is
use cash?
not only is it digital, but it doesn't really exist.
Right.
It's that it's the fractional reserve banking, right? Only one that exists. The rest is just an illusion. So yeah, but let's stay on topic.
Exactly. Yeah. So everyone uses credit cards. Everybody uses debit cards. When the government just passed, or they're working on, I'm not sure if it passed yet, but they were working on some aid for the conflicts going on right now. They're not going to print billions of dollars. They're just going to go on the computer screen and type to the general ledger, hey, we're going to take out $50 billion, and then we're going to send it overseas electronically to help fund the war, right?
Yep.
Effort. So like everything's digital anyway, and by putting on a blockchain, it would give the central banks more control over its citizens that it covers. So that can be a detriment. But here's the flip side and the good to this technology. When we just talked about earlier, there's plenty of assets that people can currently invest in right now. That's not the US dollar, or that's not traditional securities. You have gold, you have silver, you have real estate, you have art, you have a lot of other asset classes that thrive outside of, call it, the system. So just because the US dollar, or the reserve currency of the world, might be on a blockchain based system, and there could be some control mechanisms around that, you will still have a need for other cryptocurrencies. Just like right now, you can buy gold and hoard it in your house, you still can have access to buy Bitcoin. And other technologies like XRP could also be of help, because let's just say you want to send money from US and USD over to China, right? In Chinese yen. Well, what XRP, that Ripple and XRP, what they're solving is the cross-border remittance problem, right? So when you send money from one place to another, that third party, or that person that's accepting those funds, has to have money in reserve to make that currency transfer take place. Well, when you're using a technology like Ripple, you can have everything linked to kind of one spoken hub. So Chinese yen gets converted to XRP, and then that liquidity is already there. And then that XRP then gets converted immediately over to US dollar. So that's how you can have a transaction internationally at the speed of light for pennies on millions of dollars, right? So you could still have central bank digital currencies that might need to connect to a decentralized network for the speed and use of transfers even still today.
Mhm.
Plus, I think it's important for your viewers to realize too, like all these are networks. Like think about the Bitcoin network as like the iPhone, right? Think about the Ethereum network as an Android. So you have the underlying network, right? Ethereum is probably the best case. Ethereum, it's called the ERC20 network, right? Think of that as like your Android operating system. But developers and app makers can build applications on top of that network and basically create apps on that ERC20 network. So there could be current financial products right now that's solving a real world problem using a decentralized technology. And in the future, maybe there's some problems we haven't even thought of yet that can use this technology to speed things up, to help people to provide goods and services. Uh, an example would be I think anyone right now that is in title insurance, and title work, probably in the next 10 years is going to need a new job because future real estate transactions, you can basically settle on a decentralized network and have a public record of all title transactions. That token is allocated to an actual piece of property. So when you go to sell your property, you have, you know, title insurance is automatically taken care of. Everyone knows that the property history and the values, the taxes, and it's just one big ledger of transactions through the blockchain. And you're going to have, some type of financial institution, Web3 developer, handle how that technology interacts. So future, maybe like 10, 15 years from now, you could basically at the click of a button buy a piece of property, have your keys mailed to you, or maybe it's all digital at that point, and within seconds using, US dollars or XRP or Bitcoin in the future, basically buy a piece of property and everything is taken care of on the back end. Closing
Mhm.
is simple, no real estate agents. It's pretty simple from there. So that's a kind of an example of some of these digital decentralized technologies can be used to speed up transactions and friction in the current financial system going forward.
Yeah, well, I can see the value in what you said, in the fact that it does provide some kind of advantage over our current fiat currency. But then the disadvantages that comes with it are all about the safety of your money, right? Like you said, and like my friend, what happened to him, like you can get scammed easily. Then also it's the best thing since sliced bread for money launderer, for
Mhm.
criminals to launder their money. International transfer in China with like untraceable cryptocurrencies. So there's all of that that the government won't like. No safety. Well, yeah, basically no safety, and all of the money laundering threats. But then again, the fear is about the centralized digital currencies, right? So basically, that the government could seize your assets instantly, even negative interest rates within your bank account to for economic growth, um, to incentivize economic growth. Not all of these things already happened or already can the government do, but basically the government can seize they can block your bank account if they really want to. They have
Sure.
access to all of your transaction anytime if they really wanted to. All of your credit card transactions, like, they do have access to that already. So there's a lot of fears that I'm on board with, but like what happened with the truckers in Canada. Like, I don't know if you followed, but basically a bunch of truckers in Canada, they couldn't do their job anymore because they were not vaccinated after the COVID. So
Mhm.
President Justin Trudeau seized their bank account, like just like that. So your money is not actually your money, right? The freedom is cash, or gold or whatever. But as long as cash is accepted, freedom is cash. But then as soon as you have your money in a digital bank account, whether it's digital currency or just fiat, normal or current fiat currency in a digital bank account, it's basically pretty much the same thing. What happened is that it just makes the all of the fear, blocking the assets, negative interest rate, credit score. It makes it like a lot easier, and kind of designed to do that. Um, so
Yeah,
yeah, but
absolutely.
yeah.
Yeah, I agree. It absolutely does. And my thing with some of that stuff has always been, what's the alternative, right? And if you look at the world right now and where we're going, um, there's more of a push to look at this technology again. Fed now, central bank digital currencies are being worked on worldwide. We haven't touched on it yet, but there's a new standardization approach for financial standards for how money gets moved. It's called the ISO 20022 standardization. And that started actually this year with it being ramped up and really fully operational from the majority of banks and financial institutions across the world to be done by like 2026, I believe. And there's a bunch of crypto companies and projects that are already really certified and ready to go for the rollout, which means that when one institution or one bank or one person sends money to another, that incoming bank basically has the same internal systems to where there isn't this reconciliation process that is currently right now with the current Swift system. Like a lot of different banks operate on different systems, so that's why when a wire comes in, there's a little bit of like settlement and
Mhm.
reconciliation before the money actually shows up in your account, and that's where all the mess takes place. So you start adding all these pieces up, Alexis, and it really comes to the point where it's like unless you truly want to live off the grid and not have access to modern services, uh, we have it comes. I'm at the point where it's like, hey, if we can't beat them, let's join them and let's find a way to, to make money in this space. This way, I can be the change that I want to see in the world and to have like my own impact, right?
Mhm.
So, we can we can definitely there's a ton of risk in investing in this space. That's why we have a small fund that we're doing Bitcoin mining, which we think has advantages with safety and downside risk and depreciation, and to give some of the upside while at the same time capping some of the downside. But there's absolutely risk in this space. But based upon what we're seeing with the connection to the financial institutions, ISO 20022, regulation taking place, BlackRock ETF. We're seeing some inverse action right now with the markets and the weakening of the economy and Bitcoin rising, which means that it's when Bitcoin rises, it means two things. Number one, it's strengthening against the dollar. More people want to put US dollars into Bitcoin, and there's a greater demand, or there's less supply. So when we start adding all of these things up as a single point of emphasis, yeah, it's just a digital ledger technology called blockchain. But when we start to add this up on the macro and some of the microeconomic trends, it tells a pretty cool picture. And we're our team is very excited to see how this picture plays out. And
Mhm.
I think we talked in the beginning, Ray Dalio. I think Ray, and that's why I actually set aside this book, because I was looking at it the other day, and I think this book comes in really handy for people that want to learn a little bit more about the cycles of these markets.
Yeah.
Happy to talk about the cycle of Bitcoin here in a second, but
Yeah.
I wanted to turn over to you to see if you had any thoughts on that.
Yeah, well, there's several subjects, but basically, the cycles of I'll just keep take it at the cycles of Bitcoin. So, well, first of all, in terms, of course, I'm a trader and I'm a quantitative trader. So what I mean by that is that before I make any conclusion, um, I need to backtest it for a long period of time, right? So let's say I have an idea for a strategy. It might be good, it might be not good. But to be sure if my theory is right or wrong, I have to backtest it over several years. And only once I have the theory and the backtest, then I can say something and go to my partner for my hedge fund and say, look, I found something.
Right.
Um, and one of my problems with Bitcoin is because it's this process is so well deeply implemented in me, I guess. Um, there's no backtesting that you can do on Bitcoin, and that's just a fact. Because okay, you can do maybe a 10-year backtesting, but even if you do 10-year backtesting, Bitcoin is it's it, 10 years ago it was basically nothing compared to what it was today, and you can't really do a backtest into something that came from nothing and just huge spikes and something so new and so exciting and changing every day that so you cannot do a backtest. So when people say that it's gonna become this, it's gonna become that, yes, maybe, but it's not like with gold where you can say like, well, look at all of these empires. Look at the Dutch Empire, the France, Great Britain's, and you can just show them. You look at Ray Dalio's work, what he's shown us. Gold is the gold heaven for money when there's when a world order goes down. So of course, now maybe Bitcoin is going to become one, but we have no data to back it up. All we have is speculation, but it does make sense, and I see where the trend is moving. And in terms of the cycles of Bitcoin, that kind of goes a little bit with my previous point, but basically, when people talk to me about the cycle, oh, did a great zoom. When people talk to me about whatever the cycles of Bitcoin, it's just an uptrend. Like when you're a trader, the first thing you learn is that market moves in trend. They move in uptrend. So an uptrend is a upward move, then a pullback, then an upward move, then a pullback, then an upward
Mhm.
move, then a pullback. Downtrend is the same thing but opposite. And then sometime it's ranging. So it's either ranging or trending. And when people talk about Bitcoin, they talk about the cycles of Bitcoin and like it's some magic thing. But it's just an uptrend. When you look at it, it's just a move up, a pullback, a move up, a ranging phase, a move up, a pullback. It's just a normal uptrend. And then people are talking about the cycles and how every 4 years, like, yeah, there's a little bit of like continuity between the distance between the different pullbacks, but it's just an uptrend. It's not like a magic cycles made by the heavens or made by the stars. Like it's the uptrend. Yeah. So what do you have to say about this? What's your take?
Yeah, good points. So if we're going to look at any cryptocurrency, we're going to look at Bitcoin in terms of the longevity of the asset class, right? It is the has the first mover advantage. Bitcoin started in, geez, what was it? 2009, I think. And really, most charts that you look at on TradingView are going to have data back to like 2012 when it really started to gain some momentum, right? So if we're going to look at any cryptocurrency, and I want to preface this for you and your viewers in the sense of like fundamentally, like technical analysis, like you are 100% correct in the sense of when we're looking at markets like the stock market or an individual security, we have a lot of data to base our technical analysis off of. And my perspective, truly, and I'm going to mark this here, November 3rd
Third.
at 5:18 p.m. Eastern time. I'm going to mark this here that 99. I'll be nice. 90 to 99% of the current cryptocurrencies that are out there are absolute garbage. Like absolute garbage. They're either a scam, they're not going to take off, they're not going to have, any steam over the once regulation comes, and regulation is going to come for this space, if the largest asset manager in the world is going to do a BlackRock ETF for Bitcoin, I guarantee you there's going to be intense regulation that's going to come in the next year or so. So with that regulation, it's going to shake out a lot of bad actors, and this happened back in the 80s actually. Um, and what really stimulated from my experience, what really stimulated the growth of the mutual fund market was regulation in the 1980s allowed mutual funds to come together in a very safe manner. And then you had explosions of companies like BlackRock, Fidelity, Vanguard, American funds, and others. And an incredible amount of money and wealth got injected into the traditional markets at that time because now you had regulation to legally create a product, a mutual fund, and all this money from 401ks and pensions and 403bs and all this money came pouring into the space because these products offered upside potential with diversification. And so for me, that's where I see what happening to the crypto space. You're going to have regulation that is going to shake out a lot of the bad actors, but those that stay are going to see an injection of capital into the remaining tokens that are available. So whether this stuff is dog crap, whatever it is, whether it's not a store of value, whether it's not a real asset, and whether it's not real, anytime that you have regulation around a specific sector or asset class and you shake out the bad actors and then the big boys get to play, you're going to see an explosion in value, especially over time. So that's like my one quick theory before I get into the actual cycles. So um, as of right now, I think you and I would agree that 99% of the stuff out there is crap, right?
Yeah.
Okay. Glad we agree on that. Um, as of right now, I think the cycles are important. And here's why. When regulation hits, there's going to be a lot more potential of manipulation and control from the large institutional players. And they're already getting their hands in it. There's already been manipulation. There's a ton of articles about it. I'll let your viewers do the research on that. I won't get into too many examples for the sake of time. But I think right now, Bitcoin drives the crypto show. Okay. There really hasn't been a decoupling from other asset classes like Ethereum and Ripple and Binance and other Cardano and Polygon. There really hasn't been a divergence yet. Yes, some cryptocurrencies go gangbusters, right? But a lot of times that happens in the same trajectory as Bitcoin is going up. There are, people can roast me in the comments. There absolutely are uh, exclusions to that principle. But for the most part, when Bitcoin moves, the rest of the market moves up. Okay, it just happens. So with that being said, I think the cycles make sense for now, especially around the halving of Bitcoin. Now, are you familiar with how the halving works?
Um, yeah, it's basically the fact that they're gonna cut the supply by two, something like that. Like cut
Correct.
the
Yep.
mining, the people that mines, they're gonna have half of what they mine, something like I don't know. Explain.
Yeah, okay. All right, cool. So it's super simple. There's every put them in the spot here. I believe it's 200,000 blocks. Um I
What's
believe
a
that's
block?
it.
It's a Bitcoin.
Correct.
Okay.
So but basically to just make this easy for your viewers, about every 4 years, Bitcoin has what's called a halving. Basically, it's the amount of transactions, but we'll just say for every 4 years to keep things simple and easy. So for every 4 years, Bitcoin has what's called a halving, which means that the reward that miners get to mine Bitcoin actually gets cut in half.
And who
Okay.
does that? Like who decides and who presses the button?
So this is an algorithmic code already built in to Bitcoin. So basically, once Bitcoin hits a certain block number of blocks per
Yeah.
the transaction, then at that moment, then the halving hits,
So
and after that block is when
so so some so
it's
half
halved.
of the Bitcoin just disappears, or
So it's not that the Bitcoin disappears. So per so there's 21 million Bitcoin currently, right? I currently forget how much has already been mined. I think it's like 19 million has already been mined. So what this means is that every 4 years, the difficulty to earn an additional Bitcoin is basically twice as hard. So think of it as like an exponential growth function. Like when Bitcoin first came out, in about 4 years, it had a halving, right? So a lot of Bitcoin was being released. And then every 4 years, it gets harder and harder and harder, and then really until it goes to like a law of diminishing marginal returns. I think it's like 2100 when the last Bitcoin's going to be mined, something along those lines, because it's just going to get incrementally smaller over time. Now, the question is, why is this important? Well, you're constantly over time decreasing the supply of the token, which theoretically is making it similar to gold, a little bit like more valuable over the course of time. It's now harder, and it takes more energy and it takes more power to extract Bitcoin. And some theorize, I'm not 100% there, but some theorize that Buckminster Fuller actually said this. He said that in the future, and he was back in the, geez, I think 50s, 60s. Buckminster Fuller said in the future, the transference of value isn't going to be on money, it's going to be on energy and how energy is transferred. So a lot of people have this theory that Bitcoin actually and gets and retains its value by the effort that people put in to use energy resources and converting electricity into this digital asset, because it takes a lot of power to convert energy to run these machines to then mine Bitcoin. And we can get into how that works and why that works. I'm not sure if we had the time for that, but that is kind of a common theory that's out there, that basically the more energy that it takes, the more expensive it's going to get. And because of that, it's going to also increase the value of that Bitcoin, because we have taken real resources, right? A resource that could have powered your home, and we have converted it into this digital form of unit via energy. So that could be, to answer your question from before, does it have value? Well, maybe not, but it takes a lot of energy, a lot of money, a lot of power, and that underneath it all could represent a potential value of the token.
but then you cannot convert back the Bitcoin into energy.
No, you can't.
It's kind of funny when you think about it. You're taking like real energy and then to find something that is like digital. So, I mean, in short, if you had to explain what the Bitcoin mining is to my audience, so what I know, it's like basically you just have brute computer power, just trying to solve like an equation, which is basically just trying to have the right combination of 0 and 1, and it just does many guesses, like 100 guesses per second, and then it hopes to by chance it'll have the right combination of 0 and 1, and when it does, it unlocks a Bitcoin. So tell me why this isn't correct, or why this is actually not like
Yeah,
what is it actually?
yeah, good question. And then we can also talk about cycles, because we did miss that. So just to quickly touch on, before I get into like how Bitcoin's mined, just real quick, 30 seconds on what is blockchain, and like how is this technology, what does it do? So think of blockchain as simply a transaction that gets put on a ledger. Think a piece of paper.
Yeah.
When the piece of paper gets full, that piece of paper is crumpled up and it's simply glued onto paper, the page number 2, right?
Hmm.
And then what happens is that now on page number 2, now you have more transactions that are being put on that ledger. And then when page number 2 is full, you crumple that up and then you glue that to page number 3. What I've just described are the different blocks of transactions on a decentralized or a centralized network. So what that means to your viewers is that when transactions fill up the page, that gets put on block one. Block one is then added to block two, and then inside block two, more transactions are taking place. When block two gets filled, it's block one plus block two. That now goes on the block three, and then those transactions take place. So what Bitcoin mining is that in order to create a block of Bitcoin, so in order to basically take that ledger of transactions and to create that block to now where it can go on block two, cryptocurrency comes from the cryptography world. That's where crypto comes from. Cryptography. And cryptography is really a puzzle that has to get solved. And this was founded back in World War II, where they created cryptographic puzzles to send codes back and forth. And you had to know the key in the code in order to decipher the message. And they use it in wartime to send messages. So, the Germans or the US couldn't get access to the other person's codes. So, really cool story, the Enigma machine. Check out the Enigma machine, and there's a bunch of really cool guys that created this kind of world of cryptography. So if you learn about cryptography, it kind of translates very well to cryptocurrency. So really, all you have is a very powerful computer that is trying to solve the ability. All these computers are kind of fighting for the right to solve for that block, to create that block, to then now add it to the next.
So it's like a code that they're searching for. It's like if they're searching for your password and they're just guessing randomly different combinations of 0 and 1.
Exactly. I have a whole tech team that deals with this, so I'm not the best sometimes at explaining, how all this works. I'm more the finance guy, but I do, know how the underlying technology works and, actually what we're doing. But so that's basically it. So you're basically trying to solve a code. You have all these very powerful computers from around the world solving this code to then have the right to then complete that block. Now, once that block is completed, 6 Bitcoin get released currently right now. Yep. Now, what happens a lot of times is it's not just one computer. One computer isn't powerful enough. So that's why you have these big server farms that all they're doing is mining cryptocurrency. And those server farms are actually connected into what are called mining pools. So you might have maybe 3 or 4 different companies and thousands of machines working in one single pool, and then when that pool figures out the code and gets to complete the block, that pool gets a 6 Bitcoin, and that pool then shares in that Bitcoin. So
just before I move forward, you're F6C, right?
Correct. Yep.
Okay, perfect. So and then what can you explain to my audience before the podcast and like what your fund actually does? What's unique about you guys and how much you guys raising?
Yeah, absolutely. Good question. So what's really unique about our fund is, number one, we're mining. So that process that I just explained, might not have done a great job explaining it, but that process that I just explained, again, we have tech people that deal with all that. But the process that I just explained, that's basically what we do. We're part of a mining pool that mines for Bitcoin. Now, what makes us unique is we realize that we can't participate with the big boys. Even companies like BlackRock invests in companies that mine Bitcoin. So they're already making money and investing in Bitcoin, whether they have a BlackRock ETF or not. So we realize that riches are in the niches. So what we have done is we've partnered with a couple oil and natural gas providers, and we have the ability to mine Bitcoin from unused flare gas of the oil and natural gas providers. So we can basically take this engine, we put it on top of a wellhead that's spewing natural gas, convert that natural gas into energy, and then back up a trailer of Bitcoin miners to that site. Now, that sounds really complex. Why would you do that? Well, number one, the best thing about mining this way is really cheap energy costs. The higher your energy rates go, the less profitability that you have. So we have the ability to get energy at like a 2 cent to 6 cent per kilowatt hour. Most mining operations are starting at like 6, 7 cents and actually go up to 10 cents per kilowatt hour for energy cost. So our costs are dramatically less on the front ends to mine Bitcoin, which then makes the fund more profitable on the back end. So that's really the strategy. That's what we're doing. This technology already exists. There's a ton of people in Texas and Western Pennsylvania that are already doing this. And then you might ask, well, why would the natural gas company allow you to do this? And like, why wouldn't they just do it themselves? Well, it's very similar to like, why doesn't TD Bank or why doesn't Chase Bank build their own blockchain system? Well, JP Morgan is, but for the most part, none of these businesses care. Like, that's not what they do, right? So they would rather sign. And again, this is an asset that they have that they're wasting. So they're wasting money by spewing natural gas out, or they have the wellhead capped. And in certain states that is spewing natural gas, the oil and natural gas producer is actually having to pay fees and fines to the state because it's not carbon efficient. So what we're doing is actually helping the environment because it actually gets to recapture about 60 to 80% of that CO2 that is getting emitted through an uncapped wellhead. So basically, we're green. So we're making things more efficient. And the oil and natural gas industry, this isn't what they do. So they would rather sign a long-term power purchase agreement with us to buy their gas at a very subsidized, reduced rate that they're making zero now. So they're actually getting some income from this energy source. And then we can then leverage it for Bitcoin mining. So when you think about it, we looked at it and we said, this is a win-win. It's a win for the investors because they're getting access to year one depreciation, tax savings. They get asset to a new emerging asset class, which is pretty cool. We're also helping the environment by recapturing the CO2 that's just being emitted in the atmosphere, and we're converting it into energy, which is mining Bitcoin. And we're solving a big problem for the oil and natural gas industry. And if you follow politics at all, current administration does not like the oil and natural gas industry by canceling the pipeline between U.S. and Canada. So, there's a lot of pressure on the oil and natural gas industry to clean up their act, and we think we're a provider and a vendor that can help them do that.
Yeah, I think that's a pretty nice business plan you have. And so is the fund like is the operation up and running right now? Or like where are you in the process?
Yeah, fund is up and running. We're currently raising 10 million, and we have about a million, 2 million soft raised. But our first project that we're deploying, the fund needs about 2.5 to 3 million to deploy funds. So we're still in the process of raising money. Fund is live. We have everything ready to go. Legal is done, and it's just really a matter of connecting with good people, raising the funds, and then we can deploy the strategy.
So then the first 2.5 million will be used to like build the first like not build the computers, of course, but like buy the first the computers of the fund and set up the infrastructures and connect the oil and gas to like the computers. Like this is what the 2.5 million will be used for.
Exactly. Basically, the 2.5 million is to fund the first site, the first project, which would include the machine to capture the natural gas that's being spewed out of the ground, convert that into energy. It's then also to buy all the infrastructure and the equipment and the very powerful mining computers to actually mine the Bitcoin. Yep.
And what's the target annualized return, if you don't mind sharing?
Yeah, no, absolutely. So we're targeting 20-25%, based upon current prices, that current Bitcoin pricing at the time, that can be a lot higher. But how our fund works is there's no we don't have a commitment period because we have an asset that that depreciates over time. It's kind of like real estate, except you can't sell the equipment at the end. The equipment's not worth anything.
Mhm.
So, basically when you invest in the project, what we're doing is doing a return of capital first before any interest is returned. So we think that's really important because an investor gets their money back first, they stay in the fund, and then they will continue to get returns based upon what that equipment does. So our projection is within the first 1 to 3 years, depending upon the price of Bitcoin and the current hash rate of some of these pools. We predict within the first, I would say, 2 to 3 years that an investor actually gets their money back, and then years 4, 5, and 6. Around 6 years is the intended kind of life of these units. We then That's when the investor will get their interest on their money.
I mean, that sounds like, well, to get their money back after 2 or 3 years, that's like a 20, yeah, that's 20%, 25% annualized. So yeah, that makes sense. Seems like a good investment. And then, are you just holding the Bitcoin that you mine, and then are you hedging your exposure to Bitcoin, or are you, because then how, if not, then how correlated are you to the price of Bitcoin?
Yeah, good question. So for our first project, the goal is actually to sell the Bitcoin basically immediately. So this way, there's no market risk with the price. So we're not going to be really correlated to any downside. Now, for our second and third and like fourth project, we might have a little bit more of a hedge play, depending upon as the fund grows and how much Bitcoin that we're earning. But as of right now, we think it's more prudent for our investors to basically mine it, sell it, get the US dollars, and then get that cash in our investors' hands as fast as possible. We're really taking a very vanilla approach to Bitcoin mining, and we want to make it as downside risk as to provide as much downside risk protection as possible, because again, this is a new asset class. It is volatile. There is ups and downs. There's uncertainty with regulation. Like you and I were talking about, there's speculation that's happening. There could be market manipulation from some of the big players getting in, and with a lot of that uncertainty, we can't control what we can't control. So what we can control is year one depreciation. We can control the equipment that we buy. We can control the vendors that we're using. We can control the sites that we're working with. We can control the specific energy costs for our fund. And I think if we do a good job managing that, we just want to get our investors' money back as fast as possible. And then once they make money, then we can start making money, right? Like
Yeah.
that's really our motto and our ethos.
And so if people are interested and they want to contact you, how should they reach out?
Yeah. So if you guys want to schedule a call with us to discuss more about the fund and receive our pitch deck as well, just go to our website. It's futurifycapital.fund. So Futurify Capital is our organization. We are the head general partner of the funds called the Accelerator Fund. That is the first fund that we're rolling out. So if you just want to go to our website, you can request information for our current deck. You can also set up a meeting with me one-on-one, and then you can also join our newsletter to stay informed with new things and fun things that we're doing and rolling out over time. So we provide a lot of updates on our newsletter, our partners, pictures, our sites down in Texas and things like that. So that'll be a good place to stay informed.
Perfect, man. So, I mean, thank you for coming into the podcast. I think it was
Absolutely.
a great episode. I don't usually talk about Bitcoin that much, even though I've avoided it. But yeah, great conversation, and hopefully everybody learned something.
Yeah, likewise. It's always excellent to connect with you, Alexis, and it was a lot of fun. I appreciate you having me on, and hopefully you can have me on soon when Bitcoin is like 70,000 and we can talk about it again. So.
Then you can. Well, I mean, if the uptrend continues, yeah, or if the cycles continues.
That's right.
All right. Have a good one, everybody. Take care.
Thanks, guys. Take care.